It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Yeah, you're dead right. 1 in 4 homes sold in Perth now sells for over $1 million. That's 26.4% of all sales, put it that way. But what's amazing about that stat to me, Craig, is that that's doubled since 2023. So in 2 years, in other words, in 2023, it was 1 in 8 homes was sold for over $1 million. Now it's 1 in 4.
And that is David Snell in WA. We'll get back to that conversation in just a moment. Welcome back to the Real Estate Breakfast as we break down for you the Australian property market. Nice to get Monday over with, but also something else that is gone, and that is June. Today is the 1st of July. Tuesday morning. I said the other day just how fast this year is going. And why is that? There is a lot going on, isn't there, in the world? People are busy more than ever because of the cost of living. We're having to deal with that. Working longer. Often people have second jobs just to make those mortgage repayments. My theory is if we were living in the 1950s, Australia, our year would be going along at a snail's pace. Who's got it better? The 1950s or 60s or Australia in 2025? That is, I know, a deep question to ask you on this Tuesday morning. Let's right now go to Perth and catch up with David Snell, and he is the principal from One Agency North. Good morning to you, David. Welcome back to the Real Estate Breakfast. And yeah, what do you think? Do you think we'd be better off back in the 1950s? How fast is 2025 going for you?
Craig, you're a beauty. I was born in 1961, so I'm not sure what year you were born, but I grew up in Perth along the beaches near Scarborough Beach. Even some of my friends who were in social housing and so on lived a kilometre from the beach, and, we used to surf and skateboard and do all those things on the beachfront. These days you need $1 million to live there. In many ways, if I could wind the clock back and know what I know now, I'd maybe take the 50s, 60s, but I'd be missing my iPhone and my Facebook and my chat GPT. So I'm not too sure in real life whether things were always as we look back and see them, Craig.
Yeah, I'd probably, if I was to pick a decade, just having a little bit of fun with this, I would want to forever live in the 1970s. I loved the 1970s growing up as a kid.
We had a lot of freedom as kids, didn't we? You'd get on your push bike after school and nick off till it was dark, and your parents never knew or cared where you were, as long as you came home for tea. Those kind of things were part of our era back in those days, which is no longer the case now, I guess.
Well, my poor old mum, she had 3 of us. She was a solo parent and trying to struggle, with 3 children. I didn't have a bicycle, and those choppers, I had to go and steal the neighbour's chopper.
What about a skateboard? Did you have a skateboard?
Oh, yeah,
you weren't that deprived, were you?
Yeah. No, absolutely a skateboard crazy kid. Yeah, crazy kid.
No, very good.
All right, we better talk about some real estate there in Perth. And what I want to talk about is Perth has approved this $22 million micro apartment development on Stirling Street there, creating 88 compact units aimed at students and young professionals. It is branded as a revitalisation effort and aims to combat some of the homelessness. We'll talk about that first, and then I'll get you to sort of segue into a little bit of news about the Fraser Hotel in the city, which is just sold.
Yeah, so the state government budget has really focused on social housing. The budget obviously in WA was just this past week, and these were previously announced election promises, of course, Craig, but it included stamp duty concessions for first home buyers, loans for modular housing and shared equity loans. Those were the 3 big things. So they've allocated $119 million to reduce stamp duty costs for first home buyers. They've allocated $210 million for Key Start, which is where you have a shared loan scenario with the government, and that's particularly for modular homes, and I guess will take a little bit of pressure off the market at the lower threshold end where no stamp duty has been payable. I mean, up to now, having some of the stamp duty relief is great if you could find a house that sells in that price bracket that they allowed for, which was $500,000. That was very difficult. So the bottom 25% of the market is where they've allocated most of the support, to be honest. Yet the REWA's annual median here in Perth is $780,000. So that's always the challenge.
Yeah, and then just coming back to this Fraser Hotel last Thursday, a little bit of news around the sale of this.
That's right. So they paid more than $100 million, the state government, for the former, what we know in Perth as the Fraser Suites, which is a luxury hotel, or was, for social and affordable housing. So it's a 19-storey tower, Craig. And their plan is to put Perth's, and I'm quoting the government now, Perth's poorest people into luxury accommodation that once cost honeymooners and executives $320 a night. And it's the most costly acquisition ever made under a state government spot purchase program. So up till now, they've been buying, and I've sold some to the state government, they would buy one unit per complex. They didn't want to have more than one in the complexes, so they would buy spot units, which they then would put in their social housing program. But in this case, they've decided to allocate half the apartments. This is at 10 Adelaide Terrace, for those that know Perth, so right in the heart of the city. And it will be leased as affordable housing for low-paid workers, and the remainder will be rented to social housing tenants who are drawn from a wait list. And get this, there's 22,000 applicant households here in Perth. That's why there's been enormous pressure on the rental market here in Perth, and the vacancy rate got as low as 0.7%, which has never been in the history of recorded real estate here in Perth. So that's been over the last 24 months, it's been that low. So the state government's really been forced to do something. And obviously, we've had a great share of royalties here, and the budget's enabled them to allocate that. That is part of what they call the rent relief program to support tenants in hardship. It's also, they've allocated $75 million to build to rent kickstart fund, which is that micro apartments you're also referring to, Craig.
Yeah, so whilst it is a very, very large acquisition, bang for buck and long term, that might prove to be a real winner. We'll come back. We're talking to David there on the ground in Perth with more after this.
Listen to expert perspectives with exclusive real estate conversations and supercharge your knowledge base with us.
Let's segue here and look at some mortgage brokers who are becoming, I understand, buyers' agents. Probably the first thing is this a conflict of interest in any way?
There appears to be a bit of a trend in some circles of mortgage broking, and there's some new courses that have been released that are targeting mortgage brokers and teaching them how to become a buyer's agent. And to be honest, I think, yes, it is a huge conflict of interest. And even when you're reading the marketing guff around these courses, they refer to things such as increase revenue and save you from losing revenue, i.e. they're seeing it as a bit of a money grab. But you've got to understand where brokers get their money from. They get their money from selling money, right? They sell money and banks give them a commission for doing so. So if they can help you buy more money from those banks, they're going to be making more money. And so you can just see how there could be definitely a conflict of interest here.
We are more than just a real estate podcast. We cover a multitude of subjects, including property data, current buyer-seller sentiment, and the mood of the market. Follow each week all of the main talking points and know your property.
And it is a Real Estate Tuesday on the first day of July. David Snell is with us there in Perth. As we know, we've been talking about this for a little while. Australia's average dwelling price surpassed $1 million in Q1, driven by a 13% national valuation increase. Perth's median home value now exceeds Melbourne's, thanks to affordability, population growth and all of those limited supplies, which is a bit of a headache. But David, I want to talk about the fact that 1 in 4 properties in Perth now is selling, I'm not sure if I've got this right, selling for over $1 million?
That's right. You stole my fun fact, Craig. It is an amazing stat, something, we were talking about the 60s earlier, something I never thought I'd see in my lifetime back in the day. But yeah, you're dead right. 1 in 4 homes sold in Perth now sells for over $1 million. That's 26.4% of all sales, put it that way. But what's amazing about that stat to me, Craig, is that that's doubled since 2023. So in 2 years, in other words, in 2023, it was 1 in 8 homes was sold for over $1 million. Now it's 1 in 4. That just illustrates what's going on. And when those stats get published, as they do, and make headlines, of course, all the sellers' expectations all goes up enormously. And our job as real estate agents is to temper that a little, because people think, their little shack is now worth $1 million, which is not necessarily the case. I always say to my staff, I've got 17 sales reps, when they get frustrated that expectation of sellers is beyond the marketplace even, that we wouldn't have a job. Our job is to bring the buyer and the seller together and to help temper the expectations of sellers to the marketplace and where buyers' heads are at, and obviously educate buyers on what's really going on in the marketplace and bring the two together. So that's our role as a real estate agent. A lot of people want me to predict the market, and I've got various theories. It's been interesting times here in Perth. We've had it very flat for probably a decade up till 2 or 3 years ago, so we deserve some growth, I feel, Craig.
I like the way that you say, well, not everybody is going to get $1 million for their property. Now that headline is out there, and the media always looks for those handlebars to grab, and that is a great headline. 1 in 4 properties selling for over $1 million. So there is going to be a lot of education that you are going to need to do with all of those existing vendors. Right, now, just to finish up with, we should mention the rental market, because at the moment, just having a look at the units there, $650 a week, about a 7% year-on-year rise, still going pretty strongly, isn't it?
Indeed. By comparison, Melbourne and Brisbane are in the 5s, and these are for 3-bedroom dwellings in particular that we're focusing on that stat. When it was 0.7, it was just manic. It was almost sad, really. The lineup for every open home for a rental literally went up the street. There'd be 50 metres of people waiting to get through, and you'd have to allocate, groups to go in at a time to see a rental. It wasn't a happy time, to be honest. It was quite sad. That's tempered a little bit. We're back now towards a 2% vacancy rate. We would generally regard, in Perth anyway, about 2.5 to 3 as what we would call a normal vacancy rate percentage. In the bad old days, it would get up to 4.5% of vacancy rate, in which case, you were offering 2 weeks free rent or something to get a tenant. So we're heading back towards a more balanced market. Some of these initiatives from the state government no doubt will help. As real estate salespeople, we always take note of what's happening in the rental market, because it flows through. I've noted, Craig, lots of parents are coming out looking at home opens. Their view is, we'll buy this property as an investment, but guess who the tenant's going to be? It's their children. That's their way of giving their kids a help up without losing perhaps equity in their own financial position. So they buy a rental property and put kids in there to give them a chance, and perhaps at mates rates rent probably. So we're seeing a lot of that, or I am anecdotally out in the marketplace as well. So the rental market and the sales market are quite linked inextricably.
All right then, David. Well, there's a ton of information there. We'll let you get on with your day, the first day of July, and thanks so much for coming back on to the Real Estate Breakfast this morning.
Happy end of financial year. Thanks, Craig.
Unlock the secrets of real estate and stay informed about the latest real estate buzz with hot market trends, emerging suburbs, and hidden gems.
I'm finding as well, a lot of our developers are really struggling to make numbers work on, the luxury knockdown rebuilds and, houses that can be demolished. So they're starting to actually change the strategy and look at these renovators.
Some of them are making the rooms large enough so that you can put a settee in. self-sufficient, use the main kitchen, etc. That's pretty smart, I think, in today's environment.
Developers, or even just, your mum and dad investors, will buy a block in Brisbane that can be subdivided. And what they'll then do is they'll build 2 of these dwellings. Now, you're very right. Most of these dwellings, depending on who builds them and how they're designed, they'll have 5 bedrooms with 5 bathrooms and 5 little kitchenettes. And then they'll also have 1 big living space and a larger kitchen as well, which I find generally don't really get used. And then they'll have 1 or 2 car parks.
We connect you to the best real estate information across Australia. The Real Estate Podcast.